Good morning. Here is today's Korean economic news briefing. We begin today with significant domestic policy developments. The much talked about revised Labor Union Act often referred to as the Yellow Envelope Law, is set to take effect on March 10. Deputy Prime Minister and Minister of Economy and Finance, Koo Yoon-chul, chaired an interministerial meeting, emphasizing the government's commitment to ensuring the law's smooth implementation in the field. To that end, the government will operate an intensive 3-month monitoring period from its effective date, fostering constant communication channels between labor, management, and government, and activating interministerial consultative bodies. This legislation is pivotal as it expands the scope of employers to include those with actual control over workers, even if they are not direct contractual employers, and limits the extent of damages that can be claimed against unions for illegal strikes. Its successful on-site settlement is crucial for labor management relations and could influence the operating environment for many Korean companies, particularly those relying on complex subcontracting structures. In parallel, Deputy Prime Minister Koo Yoon-chul also addressed the recent volatility in the Korean won-US dollar exchange rate. With the rate sharply rising, even breaching the 1,500 won mark amidst the Middle East crisis, the Deputy Prime Minister stated that the government is monitoring the situation with vigilance. He reassured the public and markets that Korea's foreign exchange reserves, standing at $400 billion and an additional $1 trillion including the private sector, indicate no shortage of dollar liquidity. He also downplayed the immediate necessity for a Korea-US currency swap, suggesting that the current situation is largely driven by external variables, and stability could return once these shocks subside. This underscores the government's commitment to stabilizing financial markets and mitigating the inflationary pressures that a weakening won could bring to the import-dependent Korean economy. Investors should keep a close eye on geopolitical developments and the government's response to exchange rate fluctuations, which can impact export competitiveness and import costs. Moving to global macroeconomic trends, China has announced its economic targets for the year, setting a GDP growth target of 4.5% to 5%. This is notably one of the lowest targets in 35 years, signaling a strategic shift towards addressing internal structural issues such as youth unemployment rather than solely pursuing high growth. The Consumer Price Index target is around 2%, with the unemployment rate aimed at 5.5% and 12 million new jobs. Interestingly, China's defense budget is set to increase by 7% for the fourth consecutive year, reaching around $250 billion. As Korea's largest trading partner, China's economic direction directly impacts Korean exports and overall economic health. A slower, more structurally focused Chinese economy presents both challenges and potential new opportunities for Korean businesses in specific sectors. Across the Pacific, the U.S. Federal Reserve's Beige Book report, released ahead of the upcoming Federal Open Market Committee (FOMC) meeting on March 17-18, indicated slowing economic growth in some regions but persistent price pressures. The report also highlighted that tariff pressures are becoming visible, with some companies continuing to pass on increased tariff costs to customers. This suggests that the Fed may delay its anticipated interest rate cuts, maintaining a higher interest rate environment for longer. This posture from the Fed has significant implications for global liquidity, the strength of the US dollar, and consequently, the Korean won, potentially sustaining upward pressure on Korean interest rates. Adding to this, the prospect of a potential hawkish Fed choice under a future Trump administration, such as Kevin Warsh, could further prolong high interest rate policies, leading to a stronger dollar and continued pressure on the won. Moreover, the report aligns with the news that 24 U.S. states are suing against former President Trump's proposed global tariffs, arguing they abuse the 1974 Trade Act. Such trade policy uncertainties could further complicate global supply chains and trade dynamics. In the financial markets despite the ongoing Middle East tensions and an initial dip, the Korean stock market showed remarkable resilience. The Kospi surged by 9% and the KOSDAQ by 14% over the recent period. The Bank of Korea reinforced market confidence by stating that Korea's economic fundamentals have not been damaged by the recent exchange rate surge, citing ample dollar liquidity. This suggests that the market is beginning to differentiate between temporary external shocks and underlying economic strength. In the bond market, while international trends saw rising oil prices leading to increased U.S. Treasury yields due to inflation concerns, Korea's 3-year government bond yields actually declined, indicating a degree of domestic market stability. This contrast suggests that the Korean market may be internalizing the Bank of Korea's reassurances and finding its own footing amidst global turbulence. Turning to Industry and Science the AI boom continues to be a major growth engine. Samsung Electronics and SK Hynix are experiencing stormy growth, driven by robust demand for AI semiconductors, with industry leaders like Goldman Sachs CEO David Solomon emphasizing AI's potential to benefit the entire economy. This sustained demand for AI chips provides a strong tailwind for Korea's semiconductor industry, irrespective of geopolitical risks like those in the Middle East. Furthermore, the battery and robotics sectors are emerging as next-generation growth drivers. Hyundai Motor's new firefighting robot, powered by SK On batteries, exemplifies this trend. With global electric vehicle sales slowing and competition from Chinese battery manufacturers intensifying, the robotics sector is seen as a crucial new market for battery makers. The inauguration of LG Energy Solutions' battery plant in Canada further highlights the industry's strategic diversification. Finally, discussions are intensifying about designating shipping as a strategic industry like semiconductors, with calls to secure a fleet of 200 strategic vessels to bolster national security and economic resilience. These developments signal a proactive approach by Korea to foster high-value-added industries and secure future economic competitiveness. Lastly, in the real estate market there are clear signs of a slowdown in Seoul. The proportion of transactions at record-high prices has decreased, particularly in districts like Yongsan and Mapo. Overall apartment price increases in Seoul have slowed for the fifth consecutive week, with declines even noted in the affluent Gangnam 3 districts and Yongsan. This comes as President Lee Jae-myung announced a series of real estate measures, with the government reportedly considering regulations targeting multiple homeowners and speculative single homeowners, including potential restrictions on credit and Jaeon's loans. These policy interventions aim to cool an overheated market and could significantly impact household wealth and the construction sector in the coming months. In conclusion, the Korean economy is navigating a complex landscape marked by proactive domestic policy adjustments in labor and real estate, vigilance on currency fluctuations, and resilience in key export-driven sectors like semiconductors and batteries. Globally, it faces headwinds from China's slower growth trajectory, the U.S. Federal Reserve's tighter monetary policy outlook, and geopolitical uncertainties. For investors and general viewers, it is crucial to remain vigilant about global geopolitical developments, particularly in the Middle East, and monitor their impact on currency and energy markets. Domestically, policy shifts in labor and real estate will shape the business and housing environment. However, the strong performance and future growth prospects of Korea's strategic industries, particularly in AI, semiconductors, and advanced batteries, offer promising long-term investment opportunities. That's all for today's economic news briefing. Thank you for joining us.